Mayuresh Joshi of Angel Broking is also joining us on the show now. Mayuresh, thanks for joining in. Now, there's a sale going on out there. It's, I don't know, post-Diwali, post-Christmas. It's a new sales season on the Lal Street. What are you buying?
Afternoon, Surbi. I hope the discounting doesn't go on further in the next few days. Having said that, I think a few of the mid-size private sector banks obviously something that are looking very attractive to us. So stocks like, say, Federal Bank, for example, where the numbers were quite reasonable in my opinion, both in terms of how they've reported numbers on the asset quality front. One might very well argue how the situation was in terms of the overall advances growth. But the management, again, I think is very, very hopeful of maintaining that very strong run rate over the next few quarters and maintaining the NIMs as well. So I think credit costs within the manageable limits that the management has put forth and the expectations of asset quality peaking off, I think that itself should be a good respite in terms of how the valuations stack up over the next few quarters. Again, I think from the broader universe, I think a few of the paper stocks is something that look attractive. Yes, I think prices have corrected post-December. You're also seeing some influx in terms of imports coming through. But I think as a theme over the next few quarters and years, I think this should hold up with e-tailing volumes probably picking up steam. You're probably looking at alternatives in terms of the ban for plastic actually giving support to paper usage. And at the same time, I think the capacity additions are not going to be so large, which means that the realization and utilization should probably be on the improving side. So I think a few of these sectors probably look attractive at this point of time. Maybe something like an Orient paper is something that we continue holding in our funds.
Okay, Bala, we must say that TCS has been...
Quick last thoughts, Mayuresh. L&T, the numbers were good. But again, given the market, we've only seen a 1% rise in the stock today. What's your take?
So the numbers were on the better side, Surbi, and again I think they have maintained their guidance going forward. So I think the execution capabilities in terms of how their order book probably gets translated into revenues is going to be extremely critical. They've done it so far and they'll continue doing that. I think the working capital as a percentage of the top line is within manageable limits. And again I think the ROE expansion that the management is probably looking at, I think the buyback was a dampener. But largely again I think if these businesses keep on firing, my own sense is that the domestic business should hold up. What happens in terms of the execution on the international business will be interesting to watch. But very good set of numbers in my opinion. So I think anybody holding on should continue holding on to the stock.
Okay, fair enough, gentlemen. Thank you very much for taking us through market close today. Let's move on now to